कल जाने वाला है हॉस्पिटल।
जाना ही पड़ेगा ना, मीटिंग है तो। HDFC को मिलना है कल।
Sir, can you start?
Yeah, good morning everybody. I'm Shankaran here. My colleague Saran is also along with me.
Okay, thanks. Bhavani, request to please start the meeting. Thank you.
Yeah.
Can I continue?
Yes, sir.
So I'm starting the meeting. Just let me introduce.
Yeah, please.
Yeah. Good morning, one and all present. Welcome to the Ground View Conference 22 hosted by Phillip Capital on consumer durable companies. Today we have with us Sir Sankaran, K. Sankaran, who is the director at TTK Prestige. Thank you, sir, for joining us.
अभी नहीं तो
Request everyone please to mute your line.
मेरा है ना 12
Bhavani, to mute. Request to please mute everyone.
Yeah. Sorry. So today we have with us K. Sankaran sir, who is the director at TTK Prestige. Also we have with us Saran sir, who is also at TTK Prestige. Thank you, sir, for your time, and thank you once again. And over to you for your opening remarks. Post that which we will open the floor for Q&A. Thank you. Over to you, sir.
Good morning all. Actually, my throat is not very good. Still, I'll be able to answer some of your queries. I would request my colleague Sharanyan to give a little overview of what happened in Q4 and what is the current status. Then we can go for question and answer session.
Thank you, sir. A very good morning, everyone. The company did relatively very well in the Q4 compared to the last two previous years. All channels were active, though we had the Omicron hitting us in the beginning of the quarter. Our sales, we were around 16% more than the previous quarter with respect to the domestic sales. Our export grew by around 33%. Overall, we were around close to 17% better than the previous quarter. Our EBITDA was at around 18.4% against 19.4% in the previous year, the same quarter. When you look at the year as a whole, I think the Q1 started with some lockdown. Of course, we did much better than in Q1 compared to the previous year Q1. The business gained momentum in Q2 and Q3. However, the Omicron again became a dampener in Q4. We saw the unprecedented commodity price increases throughout the year. The cost of all materials and also the manufacturing costs are increasing trend. The company was able to maintain a healthy margin through improved efficiency in the operations, also some appropriate price increases without impacting customer sentiments on the market share. So with the mix of products, our presence across all channels and with a little better market penetration, we had a growth of around 24% in the domestic market during the full year 21-22. All channels, all geographies contributed to this double-digit growth. All major product categories except cleaning solution had a double-digit growth both in value and volume. Our export sales grew by around 37.5% to 98 crores this year. Overall, we grown by 24.5%. The EBITDA, ended at 441 crores with a margin of 17.42% against 16.83% last year. Our UK subsidiary also did well in spite of the Brexit, COVID, and the geopolitical issues. They grew by around 16%, achieving a sales of 18.8 million GBP, and they had a EBITDA growth of 25%, which is around 2 million GBP. During this year, we also acquired a stake, 40.8% stake in Ultra Fresh Modular Solution, who is into kitchen, modular kitchens. We are looking for a lot of good synergies between these two, between us and the Ultra Fresh. We're looking forward that this will give us some benefits in improving our market as well in the coming years. That's all the initial remarks. Over for any questions.
So any questions we can now take them.
Okay, thank you, sir. Participants who wish to ask question can raise hands. We will wait for some time while the question queue assembles. Thank you. We have our first question from Ajay Sharma. Ajay sir, you can go ahead with your question.
Yeah, hi, thanks for the update. Can I check on the price increases? What is the magnitude and when exactly did you take that? And now considering that the raw material prices are kind of peaking, how should we expect the margins to pan out this year?
We had a price increase of around 6 to 8% taken on the cookers and the cookware. And our price increase was average around 8 to 10% on the appliances. When I say appliances, some appliances might be more than 10%, some will be little less than 8%. We took this price increase sometime in Q2, around Q2 and Q3 during the year. Again, the fag end of the year, the late March, I think we increased the cookware prices by around another 6%, but all this impact would have come only in the current financial year 22-23. Of course, we did not we didn't pass on all the price increases, but whatever possible, I think we did. I think some we were able to do it through improved efficiencies.
So maintain margins on account of three prices. Wherever we could increase prices, we are taking price increase ahead of competition. And we have made efficiencies at operating levels at various points. So the gross margin level, we had some issues here and there. At the EBITDA margin, we were able to get much better leverage of operating leverage and maintain the percentage which is far higher than 15%. For long-term guidance. And as of now, we have taken price increases in April, and we have to wait and see. Currently, we are confident of maintaining our EBITDA margin levels at 15%. That has been our goal. We may get something more here and there, but we operate within a band of 14.5 to 16. And in some cases, it may go at the extreme end of the band, but we are confident of maintaining an average of 50.
And how should we think about the top line growth? Last year was a strong year, and I think Q4 was also quite good.
See, we cannot give any guidance, given that the current uncertain situations, and we indicated in our extracts or direct reports which we have circulated already that our April and May sales have been quite robust as compared to our last year. Last April is not the benchmark to be considered, but they are comparable to what we have done in Q4. Therefore, as of now, we hope that you will maintain a decent.
And on the raw material, do you think the inflation has peaked on the raw material side, or are you still seeing some increases? What's the trend?
See, I think it is peaked and probably it is slightly stabilizing here and there. And the kind of cost margins, cost and margins you assume for the whole year seems to be okay as of now, taking account the today's spot prices. We'll have to wait and see.
Okay, thank you, sir.
Thank you. Participants who wish to ask question can raise your hands or even type in the chat box as well. Yeah, next question we have from Karthik Soral. Karthik sir, you can go ahead.
Yeah, thanks for taking my question. My question is from the perspective of the customer behavior. We have seen a good amount of price rise coming in over last 1 year, and this has been on the back of COVID as well, which was again a difficult year for most of the customers. Have we seen from your perception of the customer buying pattern, is there any behavior which is emerging? And the second question is that company has done a very good job in the past of innovating around the offerings and then scaling them up. So how are you thinking about that pipeline? Are there any gaps that you think are which are there and which can be addressed going forward? Thank you.
I I think.
So Karthik, your voice is breaking. You are now not audible at all.
I'm sorry. Am I audible now?
Yes, sir, you are audible.
Okay, I'll just repeat.
Your voice is breaking. Yeah.
I'll just repeat the question. If it's my first question is on the lines of how the customer buying pattern is undergoing a change. Is there any substantial change in the customer behavior, given that there has been substantial price increases that have happened? And this has been, not just related to the product that we sell, but across on the overall wallet, the customer is feeling the pinch. Is there any substantial change in the behavior of the customer over last 1 year? And the second question is that in the past, company has done a good job of introducing innovative products in the white spaces which the company thinks that it can do a good job, and it's been successful in that aspect. Going forward, how do you think this innovation pipeline is going to scale up, and do you think there are any spaces that can be addressed at the moment going forward?
Okay, to take the questions sequentially, in terms of customer behavior in FY21, we saw a lot of pent-up demand coming from people working from home, and they had no other avenues to spend. So they largely got abated even at the start of FY22 itself. Point one. Point two, in FY22, there has been income increases, but not equally. You can see that income levels were reasonably good at the middle income and upper middle income group, and some parts of rural areas also. So customers who have been spending on home, they started spending on other venues also. That means you can see the hotels being full, travel being occupying places, purchase of apparel, jewelry, and then weddings are becoming quite bigger as compared. Second, however, we see a lot of marriages taking place. Therefore, money is being spent, not necessarily on the quantum they spent on home improvements in FY21. That is the whole thing. If you look at the customer behavior, they're spending more on other items they could not spend for a couple of years thanks to COVID. At the same time, there is a pressure on disposable income of the people or the lower middle income group or bottom of the pyramid. But our core customer is largely middle class and above, and value-added segment is seeing traction as compared to the entry-level price segments. So our innovations have been largely in the value-added segment, which will continue to happen because that is the important lifeline of the company. As always, we'll always have about 18 months of pipeline innovation to be launched 18 months later. Therefore, we need not be surprised. The pipeline innovations, model changes, or break changes are always there. All categories. We did Swatch range in pressure cookers a couple of years back, and 85% of the pressure cookers are sold only on the Swatch platform, which is design protected and patent is avoided. Similarly, the same platform we introduced for gas stoves. About 25% of the gas stoves are sold on such platform. Something more will come. There is actually a premiumization there on that ground. Therefore, to answer your question, customer behavior is not the problem. The customer, the venues of spending are changing. The affluent group will continue to spend. At the lower income level, there is a stress on entry-level products. This is what we are seeing at this point in time.
Fair enough. Thank you.
Participants who wish to ask question can raise your hands or even type in the chat box. We have one question in our chat box, sir. I just wanted to understand the cooker and the cookware market size, and how are we placed in that?
See, the market size is largely certain amount of estimate because there is a large amount of unorganized player or unlisted players where you don't get the data at all. So there is no organized way of collecting data on this point. But I do believe that pressure cookers in terms of value will be of the order of 2,500 crores or so. And so also cookware. What I'm talking when I say cookware, we cannot take the entire space of aluminum and other cookers. We are talking about a non-stick, value-added stainless steel and coated cookware or it is cookware. That could be of the order of maybe close to 1,500, 2,000 crores. But these are general estimates because the market surveys are not complete.
Okay, sir. Thank you. We have next question from our sir Deepak Agarwal. Deepak sir, you can go ahead.
Sir, thank you. So just 2-3 questions from my side to again just to harp on pricing. So have we seen any price cuts recently, mainly because of some softness in the commodity over particular last 45 to 30 days?
Sharan, can you answer that?
Yeah. See, the prices have softened compared to what it was in March and April that we have seen, but it is still not come to a level where it used to be there earlier. So still, I think the price increase what we have taken is at par. It's just enough for the current the spot rates. That is how it is being, because we are not passing on all the price increases onto the customer. We are only doing it cautiously. What minimum we will be able to pass on, that's what we have been passing on. So as of now, with the spot, whatever is available today on the price, I think that is what is getting covered in our current price increases.
Got it. So it's fair to assume that at this current commodity prices, broadly the cost has been passed on to the customer. That's right.
Yes. Yeah. Okay. The best possible. Yes.
Thank you so much, sir. The second one on online demand or online sales. So last 2 years, particularly, we have seen a very strong demand coming from online, mainly because of people sitting at home and all. But as things opening up, we have seen some softness, particularly last 2 quarters or last 4 to 6 months, where we have seen some softness in online. So can you please help us how that online trend is shaping up, and currently what's the share in online, and how the growth is shaping up from the online trade channel? Thank you so much, sir.
Definitely on.
Carry on, yeah.
Yeah, sorry. Definitely online has been doing well during FY21, and then even FY22, whenever we see the lockdowns, I think the online has been doing well. They have seen a good growth. But once the lockdown restrictions are removed, I think we have seen the offline stores catching up. I think there we have seen a good growth in the offline stores as well during this FY22. Definitely the share of online is little more than what it used to be before pandemic, definitely, but offline channels are also at par now. They are back to their old growth.
And how's our rural channel doing, sir? Because that was our rural MFI channel that was slightly in the pressure.
We did have issues a couple of years back. I think we have broad-based ourselves with many microfinance companies. I think we have seen a reasonably good growth on the rural side as well. But still, it is still a small portion of the overall business of the company. It is still less than 5% of the overall sales of the company.
Correct. And so currently, how much is the online share now?
Roughly around 18%.
Okay, 18%.
Average, yes. Full year, yeah.
Okay, just one question which I have received from the chat on the chat is if you can help us with the share of stainless steel and in a cooker and cookware category, and how that stainless steel share has moved, and also if you can just broadly help us, how's the margin between stainless steel and aluminium? These are 3 questions that I have received from the chat. Yeah, thank you so much.
Stainless steel has been gaining ground for the last couple of years for custom preference steel. Around 25% of our sales could be coming from stainless steel. That's the estimate we have. Regarding margins, we actually, as you know, we have a cost plus pricing model. Of course, subject to target costing depending upon the customer preferences. So by and large, the gross margins or the EBITDA margins will not be different between stainless steel and this one. Of course, the value, absolute values in stainless steel very high because of the price is high.
Perfect. Thank you so much. I'll circle back in the queue, sir. Thank you so much.
Participants who wish to ask question can raise your hands or even type in the chat box. Thank you. Yeah, Ajay sir, you can go ahead with your question.
Yeah, can I check how are you seeing the share of organized versus unorganized, and within organized, are you guys gaining share?
See, these estimates are a little bit hazy because what we consider as unorganized is becoming organized over a period of time. So unorganized, some are being replaced by newer brands and newer this one. By and large, the customer preference has been to go for brands. Ever since the COVID broke out, people were not trying to buy online from home. They wanted good brands. Though the general move is to shift towards brands. They even the so-called regional unorganized brands, they are also trying to become organized over during these years. Still, you can say about 30% of the market will be unorganized in cooker and cookware.
Okay, and what's your estimate for the how fast is the industry growing for both cookware and the appliances side?
See, the industry growth has been a little bit hazy because of the COVID pandemic. But I think they have stabilized around 20% pressure cookers as a category grow at single digit only because of the penetration already you can find in urban areas. In cookware, it should be in double digits, also in all appliances. Going forward, I'm not talking about the last 1 year.
Okay. Right. And your aspiration, do you have any aspirational growth in terms of the?
We already given, we wanted to double our domestic turnover and the current categories of exports from the current 2,500 to 4,000 crores by 2026. And we are expecting, if possible, to get some inorganic opportunities. We reserved about 1,000 crores for that, out of which already Harvard contributes close to about 200 crores. So another 800 crores, we are able to get some good addition. That is what we are aiming for. Otherwise, the existing categories and existing export lines expect to be around 4,000 crores by 2026.
So lastly, on your outsourcing, how much of your production is being outsourced and how much is coming from China?
It is 50-50. By now, 50% is produced within our own factories. Balance 50% is outsourced, largely within India.
Sorry, outsource is all from India, is it?
Yes, yes. We very little import. We are importing from China.
Okay, thank you.
Thank you. Participants who wish to ask question can raise your hands or even type in the chat box. Thank you. We have the next question in our chat box actually. Just wanted to understand about the growth drivers for the business for next 2 to 3 years. Can you elaborate more on it, sir?
Not able to hear your question. Can you repeat, please?
Okay, sorry. Just wanted to understand about the growth drivers for the next 2 to 3 years. Can you elaborate more on it?
See, the basic growth driver should be India should be growing at 8% or more. That is very important. If India does not grow, we'll be only taking share here and there. But assuming that India grows 8%, we do believe that the growth drivers will be product as well as geographies. Then spends on projects and outside the urban areas takes place. Definitely, you'll see a lot more demand coming from the non-conventional urban areas. So we do believe that the growth will be driven by pressure cookers new penetrations, but it will be a single digit we expect on an overall basis. And cookware, we do believe there's a lot of scope for cookware to grow going forward. A lot of appliances. We do believe growth drivers will be geographies as well as products. Of course, exports.
Okay, sir. Thank you, sir. We have next question from Jiga Bhatia. You can go ahead, man. The question.
Yeah, thanks a lot for taking my questions. So you just mentioned about your stake in the modular kitchen segment. Could you just elaborate more on, how the revenue mix going forward would look like and the margins of that business?
So basically, we were in the modular kitchen business way back in 2006, if we remember right. But we did not have an end-to-end
Sorry,
solution.
just
We were
excuse me.
outsourcing everything, starting
Actually,
furniture
we're not
to
able to
carpenter.
hear you clearly, sir.
So some network
Are you able
issue.
to hear it?
Yeah,
That
sir, if you can
we'll
switch off your video, that way
the
there
video.
should be some bandwidth. Yeah. Thanks. Still, sir, there's some we
Can I
can't.
go? I'm audible now.
Not it, sir. Sir, what I will do is I will. I think some
bandwidth
issue at our end. Yeah. I'll come over there, sir. 1 minute.
Are you? Hello.
Hello.
Yes, sir.
Are you able to hear me now?
Yes, it's better now.
Yes, much better.
Okay, right, fine. So, as far as market is concerned, we were in that business for a couple of years, way back in 2006, 7, and 7 and 8. But we did not have end-to-end solution. We have been outsourcing everything, right from design to furniture to architect. Everything was done, so we could not make a success out of it. So, but however, it's one of the interesting things for us to be in modular kitchen. We did not have the capability to have end-to-end solution. So Ultra Fresh, they have manufacturing, they got design, they got IT and franchise stores across India, and associate with them and give them the capital that is required, so that we can actually a double engine in terms of prestige brand and Ultra Fresh expertise, and it benefit both because our own 670,000 and there's 80 stores can together contribute to appliances to improve these efforts. So the investments are not very high, and we believe that they can be leveraged to get a couple of hundred crores turnover on a consolidated basis.
Okay, and any thoughts on the margin side, sir?
See, this margin will be slightly different from the margins we have, but we do believe at the consolidated level, EBITDA less ROCE will not be materially different from what we are there, because see, this will be still about 5-6% of the company's business, of the consolidated business. So it would not impact margins, but the return on investment will be quite attractive.
Okay. And going forward, can you just throw some light on the kitchen electric appliance segment and how do you see the growth and the margins?
Which segment you're talking about?
Sorry?
Which segment?
Kitchen electric appliances.
Kitchen electric appliances, we currently operate, at the company's average EBITDA level, which is between 14.5 to 16.2, depending upon the season we operate in. And going forward, we believe that is possible. Of course, the price increases are input costs go up materially. We'll have to think about this. Otherwise, we believe that the stability will continue.
Okay, and any area of growth, like is that again going to be like geographic growth or penetrating into the untouched areas or what? Or are there any new products that are to be offered in this sector?
See, electrical appliances, as of now, the penetration is not as pressure cookers in other areas. So, therefore, then the electrical appliances come at a very large range, from price points to designs and innovations. Therefore, each innovation will target a certain customer segment. It will be a very dynamic process and a little bit of a complex matrix. What we can do is that every player is also trying to do their best in terms of bringing variants to their existing products. And given that India is trying to get electrification across all the villages, most villages are now electrified, and then except it has reached the individual homes. So look at once the current crisis of power, input for power industry goes away, we do believe electric appliances will have growth both in urban and non-urban markets.
Okay, so what is your strategy of deepening your rural presence?
See, we are actually, see, the rural India has got different type of reaches depending on the product you are talking about. A pressure cooker, it reaches in a different way. Electric appliances reach in a different way. FMCG reach in a different way, but there is no organized distribution for non-FMCG products in rural areas. So we'll have to go through, local aggregating agents or smaller microfinances company who provide finance. So that will be the entry over a period of time. After all, this urbanization will catch the so-called rural areas also. If you compare 2001 and now, what did consider rural in 2001, it become urban today. So there's a distribution reach that is possible. So it will be an attempt to ensure that use some of this microfinance platform as also to look at whether any other platforms can be supported in terms of physical distribution.
Okay, sure. That's it from my side. Thanks for answering these questions. Thanks, Deepak.
Thank you. Participants who wish to ask question can raise your hands or even type in the chat box. Thank you. Deepak sir, you can go ahead with your question.
Thank you, sir. Sir, I have received two questions on my chat box. So, just on the broader industry trends, have you seen any particular specific trends on the categories that premium is growing faster or mass is growing faster? If you can help us on that. Second one will be particularly on the trends from urban and rural. Currently, how these two markets are behaving in terms of overall demand or overall customer footfalls. Thanks.
See, the demand, as I told, in terms of urban areas, it is driven by large replacement in cooker segment. Cookware penetration at these levels are not coming through, but value-added products as a class have been getting more traction as compared to the entry-level products across various players who are playing in this market. So, largely, if you see the reports of other players, whether it is the white goods or the brown goods, it is always stated that the value-added products are getting more traction than the entry-level products. Actually, there is an income pressure on the entry-level product consumers. So that is the trend as of now. You have to wait and see how the inflation pans out, how this geopolitical situation eases out. As of now, I would say that the more people are able to buy and they buy value products.
And in terms of geographies, you said urban is shaping up, urban is witnessing higher growth versus rural. That's right understanding, sir?
It is correct. As far as our concerned, rural, as far as our business is concerned, we are only scratched one part of the total rural market. That has been growing as far as we are concerned. We cannot, we are not able to draw a comparison between FMCG's claim of what is happening in rural market or other players. As far as our products are concerned, we are able to see traction in rural market.
Got it.
Both in the market.
Perfect. And so just one more data related question that I receive is if you can help us with the channel mix. So how much is share coming from our own exclusive stores and how much from a traditional distribution model and how much from other channels. So if you can help us with that breakup, that will be helpful.
So around 45% or more will be from the traditional channels, 15% from our own prestige exclusive stores, and about 18% from online, about 12 or 13% from modern stores. And then we got the CSD and other institutional sales that take about 5%. Rural is about 4%.
And among these channels, which channel according to you has grown faster, sir? over last particularly 2 to 3 years?
It is, it is quite difficult for you to take any guess on these trends because we had the most normal year was 18, 19. 19, 20
Yeah.
last quarter was disturbed. 20, 21 first quarter and last quarter disturbed. 21, 22 same thing. First quarter disturbed, last quarter somewhat disturbed. Therefore, this channel, the growing depends upon what the consumer wants to do. We cannot do much about the channels. If the consumer goes to a particular channel, we want to be there.
Got it. Fair enough. Fair enough. So one more question that I've received is particularly if you can help us in kitchen appliances, which all categories are according to you are witnessing higher attraction on tertiary levels? Thanks.
I just not able to follow the last
on ground, basically on the channel, which all categories are witnessing higher growth. Yeah, thanks.
See, by and large, if you look at appliances, they got traction both in modern format stores as well as online stores. Apart from our own prestige exclusive.
Okay, perfect, fair enough. I'll just circle back in the queue, sir. Thank you so much.
Thank you. Participants who wish to ask question can raise your hands or even type in the chat box. We have next question in our chat box, sir, relating to just wanted to understand about the region-wise mix of the company.
So we have 50-50 north and south.
Okay. Thank you. We have one more question in our chat. Wanted to understand about the cookware segment. What is the growth going forward?
We always said, we are looking at double-digit growth in cookware.
Yeah. We have next question from Aman Shah. Aman sir, you can go ahead with your question.
Hello. Am I audible?
No, you are not audible, sir. Can you speak loud?
Yeah. My question is, what do we think of now with the entry of a new player like acquisition of Butterfly Gandhimati, and they are also good on the appliance side. What do you think will be the competitive intensity from now, given that they also now want to focus more on, say, the offline channel, non-South as well as within South outside their core markets?
We welcome that. Any competition from a large player is always good. They'll bring more visibility to the market. Market will grow. We don't see any threat on that account.
Right. So the anticipation is like it will be better to take on the market share of the unorganized players is what we would think so.
Let us look at this one because you cannot actually hair split we have a very clear strategy of who is my target consumer and what is his pricing preferences, and we keep adding value to the product by the new renovations, and as we follow a simple principle of quality consumer goods at affordable prices and continuous innovation. Therefore, we will address each of these income segments as we go along. We found that there is an income segment we never addressed. We brought in Judge as a tactical brand, so that that is price point is between the unorganized sector and the entry level of the organized sector. So that has been doing quite well. We are close to 50 crores annually at this point in time. Therefore, the strategy is very clear. It is not that we are going to have different strategy because the company is doing something else or that. We would like to be innovative. We like to pioneer the whole concept, and therefore stay ahead of competition. Whichever competitor we are talking about.
Right. Sir, where do we see our exports share going to in the medium term?
See, export as a revenue 100 crores at this point in time. We would like to take it to 4x or 5x by 25-26. We have got existing clientele who want to source more from us. Newer clientele who want to look beyond China as a sourcing point on a stable basis. Our factories meet with all SA 8000 standards, which are insisted by the European buyers. So we are confident of taking that. It may be 8% of the company, 10% of the company, depending upon the total company share. Our target is to get between 400 to 500 crores in 4 to 5 years.
Sorry, so we said we want to take it to 4 to 5x in by 25-26.
Here, 100 crores, 4x to 5x is our target.
Okay. Sure. Thank you, sir. Thank you very much.
Thank you. Participants who wish to ask question can raise your hands and even type in the chat box.
Sir, just a question on this follow-up from the previous participant only. So in export market, which all be the key product categories according to you, which will be exporting and which will drive this kind of growth? Yeah,
it's largely driven by cookware. Non-stick or anodized large by that will be the large component.
Got it. And sir, also just want to check any other product categories where will be cost competitive and apart from cookware, which can see a significant export potential from here on, as globally we have seen a supply chain disruption. Yeah.
See, basically, India is not that competitive in terms of electrical appliances for exports. Therefore, I don't think that could be an area of a dramatic growth. So wherever we are able to sell the Prestige license brand or Judge brand, we can say sell these appliances largely to the ethnic population outside India, who are used to the kind of electric appliances they use in India. Other than that, we do believe that pressure cookers certainly will be a part of the export, but majority will be driven by cookware.
And all these exports will be under our own brand, and it's a mix of white label.
No, most exports will be in OE brands.
In OE brand under white label.
Yes.
And how the margins difference between exports market over the domestic market, sir? Thanks.
What level you're talking, EBITDA level or at gross margin level? It's because when you talk exports, we would observe all the core rates within the domestic markets. So even if I get 10-12% of the price, that's a huge return on my capital employed.
Correct. So at EBITDA level, sir.
What I'm trying to say is that I don't want to be led only by margin percentage to run my business. There's investment made by our own investors, our own promoters, our internal accruals, and people like you also. Therefore, what we want to do is to maximize return on capital employed, then trying to focus only on margin.
Got it.
Assuming I'm getting 17% margin in domestic market, I get only 10% in at EBITDA level in the export market. If I drop 400 crores of exports, I'll end up having 70 crores dip in my profit.
Got it. Understood.
We built enough capacities. That's very important to look at.
Got it. Fair. Perfect. Thanks.
We will take last 1-2 questions. Participants who wish to ask question can raise your hands or even type in the chat box.
We just take last question. If anyone wishes to ask, he can unmute or she can unmute, and then they can go ahead. Thanks.
I think we don't have any questions.
Yeah. So thank you so much, sir, for taking out your valuable time for this call. This was really a very interactive session, sir. Thank you so much once again, everyone, for joining this call, and thank you so much, management, for taking the time for this call and sharing the insights. Thank you, and thanks everyone for joining this call. Thank you so much, sir. Really appreciate it.
Thank you.